Hey guys, in this video, which is going to be a little bit longer than the other videos that I have uploaded so far, I want to talk about EBG, a stock on the ASX, or Umundi Group Limited. They are essentially a business that runs taverns and investment properties in Brisbane, Australia. That's where all of its operations are currently. Now, this business has been around for a while, through ups and downs. That's the tech wreck, GFC. And essentially, I entered this trade as part of my, as the first trade in my income system, or the income strategy part of my portfolio. It's really to be seen as a high dividend yielding trade with a fully franked dividend yield of around 5.5%, and hopefully a stock that will see little drawdowns, which I'll explain why I believe that should be the case later on. So first of all, from looking at the chart, we can see that it has been a lot higher previously, and we can also see that it is currently in an uptrend all the way since 2010, with a trading range beginning to form around end of 2016. Now that potentially looks like it's going to break higher here. You can see there's resistance forming here. I do believe the fundamentals would imply that this chart should break to the upside, and I myself on the 11th of July entered 1.08% risk of my portfolio in the trade. And if I just pull up the daily chart, that was me right there. That tiny little amount of volume was me entering the trade at $1. I would probably see my risk being below all of this kind of resistance here around this level. That's where I would be looking to get out of the trade. Now, that's the technical and the risk management side of things. So moving on to the more fundamental side of things and the business itself. The reason, first of all, why I think the dividend yield of about 5-ish% is very attractive is because, first of all, it's fully franked, which gives me as a Australian investor a tax advantage in that I pay less tax. So that's really looking at the equivalent of a 7% dividend yield pre-tax. I think the cash flows of this should be fairly stable. The business is based on hotel operations, which is defined by the annual report as selling packaged alcoholic beverages for retail outlets, selling food and alcoholic beverages on premise through bars and restaurants, and operating licensed gaming revenues. So the revenues actually stayed fairly strong during the GFC, which is always a good indicator of strength through adverse economic conditions. So that's one of the reasons why I think this fully franked dividend yield can continue to sustain even during economic downturns, making it an ideal investment for the income portfolio. The nature of what is generating the cash flow itself in terms of investment property and the running of taverns and renting out the investment properties, yes, it's going to be affected by the economy, but I think collecting rent is still a decent way to establish a stable cash flow. So I'll pull up the income statement here. So yes, like I was saying, I do believe it generates decent cash flow. So you can see the revenues, not a lot of it actually does come from investment property. So you're more looking at the hotel operations, which is going to be the gaming, the selling of beverages and food, which, as I mentioned, it will be affected by an economic downturn, but it has shown, at least through the GFC, that it has been quite a persistent and stable cash flow for economically difficult times. The next point as to why I think this is a good investment or trade, I use the terms interchangeably, probably, which annoys people, certain people, but I think as long as I'm specific about my time frames and my objectives for the trade or investment, it doesn't really matter what I call it. In terms of expenses, well, you can imagine as a buyer of property that debt is something that they would have a fair bit of. So just let me pull up the annual report.